Hello, hello. Sorry it took me a minute to get connected there. I'm Candie Conat, and I am with my back office coach. I work with small business owners to help them devise a plan as far as their bookkeeping procedures, what they can do themselves, what they should hire to be done, how to handle different situations, software training, information about sales and use taxes, payroll taxes, all the generalities of bookkeeping in general for your small business. So I am here today to answer a few questions that were sent to me by different small business owners from around the country. And I'm going to try to answer as many as I can in a half an hour. Feel free to post below in the comments your questions. If I don't answer them today, I'll try to answer them next week. I'm going to do this once a week. Just to stay in touch with everybody, help to share good information and that kind of thing. After I'm done, I will post in the comments sharing some helpful links, giving you information about the different things I talk about while I'm answering these questions today. So bear with me. I am not good at video. I haven't done this before. I'm new at it, and so hopefully I don't stutter a lot, and hopefully I don't swear, but I'll do my best. So anyway, I received 13 questions from people in the last few days that they wanted answers. So obviously I can't answer them all today. I selected 4 of them that I'm going to try to answer for you to the best of my ability. I have been a bookkeeper for almost 30 years, about 28 years now. So I have dealt with many different people from all walks of life, all different kinds of businesses. From people with no employees to people with 150 employees. So, I spent a lot of time working with contractors over the years. I've worked with salons, I've worked with restaurants, just all kinds of different types of businesses from all over the country. So I have quite a good stretch of knowledge to address different situations. And so the first question that I decided to answer today is from Anna S. in Kansas City, Missouri. And she asked me, can she just pay someone a flat amount, somebody that does some services for her, maybe just here and there throughout the year, can she just pay them a flat amount and issue them a 1099 at the end of the year without running that payment to them through payroll? And obviously we would all love to not have to do payroll for people that provide services to us. But obviously the IRS would rather you did. So no, you can't just simply say, I don't want to do payroll, I'm going to give this person a 1099 and we'll go from there and it's all peaches and cream. Doesn't work that way. The IRS will not appreciate that. So obviously these answers to these questions that I give you, they are from my knowledge, my experience, my learning over the years. I've learned from a lot of different CPAs over the years. I've dealt with the IRS. I've dealt with the state of Michigan and the state of Ohio, state of Illinois, a bunch of different states. So I kind of know what they want, what they're looking for, but somebody else may have had a different experience. They may have a different opinion. Things can be interpreted many different ways. So you gotta try to pick what the IRS is gonna decide on, I guess. But anyway, so 1099 versus a W-2 employee. You cannot just simply say, I want to pay this person via a 1099 and not do payroll taxes. You just can't do that. You're going to get yourself in trouble. So basically the IRS has guidelines that they look at, and they use those guidelines to determine if a person is considered an employee or if they're considered a subcontractor, and you can just issue them a 1099. When I'm done, I'll share the link to the IRS website where they ask their questions, they give their guidelines as to what they look at. But one of the biggest things that they do look at is how the person is controlled in what they do. So if let's see, the actual way they word it is the general rule is that an individual is an independent contractor or 1099 recipient if the payer has the right to control or direct only the result of the work and not what will be done and how it will be done. Sorry. So basically, when someone shows up to do work for you, if you're guiding them, if you're telling them how it's going to be done, use these procedures, do it this way, and you have to instruct them and advise them, and they're showing up for you on a regular basis, doing work for you, they're an employee. If someone has a business, a legitimate business, they file income tax returns for that business, they have business cards, they maybe have a website, they advertise, they don't work solely for you, they work for other businesses as well, then those are all good signs that they can be treated as a 1099 subcontractor. So the best way, in my opinion, to handle dealing with a subcontractor is when you go to pay someone and they're doing a service for you and you're going to pay them, and you need to look at it right then and there and say, is it possible that this person is a 1099 subcontractor? Yes, it is. Then you give them a W-9 form to fill out. That's the name of the form, and I'll post the link to the website on the IRS website where you can download blank forms. And you really should have every vendor that you deal with fill out a W-9 form, and you keep it on file. That is your proof that that person said, here's my business, this is my business tax ID number, this is my address. And that is your way of saying you did your due diligence to make sure that you got the information from that person. Because people who are companies, businesses that are corporations, do not have to be given a 1099, and they're going to mark that right on that W-9 form that they fill out. So that's going to be your record letting you know that in your software, or if you do them by hand or whatever, however you do them at the end of the year, that you either do or do not need to give that person a 1099 form. So hopefully I didn't just confuse everybody. You can always ask me more questions. Feel free to post comments. And if I don't address your questions today during this live video, I will post answers on my Facebook page later. Or you can always email me, call me, message me, whatever, and I will do my best to help you out and answer those questions. So that kind of answers Anna's question, hopefully. Question number 2 is from Jake P. in Marquette, Michigan. I'm in Michigan, so Marquette, Michigan. He's up in the Upper Peninsula of Michigan, one of my favorite places. His question is, how do I know if I should be charging sales tax? And what do I need to do if I should register for sales tax? So sales tax, use tax, that stuff is all, it's very fun to me. I love it, but it's can be very confusing for business owners. So the best thing to do is go to your state's website and go to the sales and use tax area. And you got to kind of search through information. If you just can't do that, then you need to consult with somebody and make sure that you are following your state's sales and use tax guidelines. Generally speaking, if you are selling a product, at least this is the way it is in the state of Michigan. Every state is different. A few years ago, the state of Michigan tried to institute a new sales tax law to charge sales tax on services, but that was quickly repealed a few months later. So currently in the state of Michigan, we charge sales tax on things like products. So not on services, but there are many states that do charge sales tax on products and services. And there are some states that do not charge sales tax at all. So maybe they charge some other kind of tax. So it just depends. But you need to find out the rules for your state. And one step further than that, you need to find out the rules for states that you ship your products to. In this day and age with internet online selling, that kind of thing. Many states are redefining, I guess you would say, their rules about collecting sales tax. In many states, if you ship a product into their state, then they expect you to collect tax on that product that you sent to their state, which means you then have to register in their state. And not only your state, but in the state where you sent it. But you have to look at the guidelines on that. There are things that will determine, based on the state, what constitute collecting tax on delivering a product into their state means. So if I don't mean to be a kind of convoluted answer there, give you a convoluted answer, but it really does depend on your state and its rules and laws. But generally speaking, if you're selling a product, you should be collecting tax somewhere along the way. Then the other things that you need to pay attention to with collecting sales tax would be people who are non-taxable, customers that are non-taxable. People, like in the state of Michigan, if you're industrial processing, which means manufacturing something, then the items that you buy that are used in that process would be non-taxable. If you are reselling an item, for example, if I have a hair salon and I'm purchasing mousse and whatever, hairspray and shampoo, and I'm reselling that stuff, then it's non-taxable. That doesn't mean every single thing you buy is non-taxable. Only the things that you're reselling are non-taxable. So if you're buying office supplies or general supplies, cleaning supplies, that kind of thing, you pay tax on that stuff. Some people think they don't have to pay tax on everything they buy, but that's not the case. Nonprofits don't pay tax, such as a church, a school, whatever, like Goodwill, that kind of thing. They don't have to pay tax. And generally speaking, they don't pay tax on anything they buy. But whenever anyone tells you that they're non-taxable, you need to have them fill out a sales tax exemption certificate for your state. And I will post the link to the one for Michigan. You can check it out. Even if you're not in Michigan, check it out, and you can look for a similar form that will be on your state's website. If you need help finding your state's sales and use tax website, just send me an email, send me a private message, or post it on my Facebook page, and I will gladly help you find it. And I'll even kind of help you find just the general overview of how you should do things. So once you determine that you need to collect tax, sales tax in your state, you need to register with your state. And most states now do that all online. And then your state will determine what based on how much sales you have, whether you will pay monthly, quarterly, annually, that kind of thing. So, and then you will file a return telling them how much sales you had, what your gross sales were, how much were services, how much were taxable sales, how much were non-taxable sales, and then you will remit or pay to them the amount of tax for whatever period that you're reporting for. So, I guess that is kind of the general overview on figuring out if you owe sales tax and how to go about taking that first step. It's very important to stay on top of it. You don't want to start your business and 6 months later find out you should have been charging sales tax, or be charging tax and not paying it into the state, or whatever. It really can add up in a hurry. You're charging tax. If you're collecting tax from people, you need to be remitting it to your state, and you don't want to end up penalized by the state for not filing regularly and getting that money in there when you're supposed to. So make sure you stay on top of that. Now, question number 3 is from Kelly A. In Red Wing, Minnesota. I like the name of that town because I'm from Michigan and I love hockey, and we have the Detroit Red Wings. So, all right. Her question is, what is the best way to record my business expense for tracking my mileage for business use of my personal vehicle? So there's lots of different ways to do this. The The way I do it, I do it manually. I just keep a notebook in my glove box. At the beginning of the year, I write down the mileage on my vehicle, and then whenever I go somewhere for business, I write down where I'm going, what my mileage is when I leave, what my mileage is when I get home, and if I made any personal stops in between, I write that on there. And the date, of course. And then just do that throughout the year, and every couple of months you can kind of tally it up, total up your business miles. And then at the end of the year, on the very last day, on 12/31, write down your mileage on your vehicle at that time. And that way you can see the total miles you drove in the year, and then you can add up your business miles, and the difference is your personal miles. You also want to keep track of expenses for your vehicle, like maintenance expenses, oil changes. Keep track of your gas. Keep track of anything you buy for your vehicle. You buy a headlight, or if you have to take it in for repairs on the transmission or whatever, if you buy tires, all that kind of stuff. And you don't get to take both. You don't get to take a deduction for the miles you drove and maintenance and gas and that kind of thing. It's one or the other, but it's best to keep track of both because you can figure out which is best for you. And that'll be something you'll discuss with whoever does your taxes, or if you do them yourself, you'll figure that out at the end of the year. But it's best to keep track of that throughout the year. If you get audited by the IRS for your business expenses, you will have to prove. Take my word for it, I've had to do it. So I got audited a few years ago, and I had to give them all my records for a 4-year period for my business use of my personal vehicle. And they, believe me, they want every last little detail. So, and they will check too. If you write down you went from Traverse City, Michigan to Detroit, Michigan, and it was a business trip, and you write down the number of miles, they will check and make sure you wrote down the right amount of miles. So, so there are other ways to keep track of it besides using a notebook. There's tons of phone apps out there now. I know lots of people who use the phone apps to keep track of that. I just only can get so many things running on my phone at one time when I leave home, so I just prefer to write it down and be done with it and not have to worry about turning it on my phone, turning it off on my phone, and that kind of thing. So I will actually post a link when I'm done to a couple of different phone apps that you can look up, and also a sample business mileage log book that you can buy, a little log book where you can write it all in up every time if you want, if you'd rather do that than keep it in a little notebook. So, all right, we have one more question here. Let's see, this one is from Kayla T. in Martinsburg, West Virginia. She wants to know, what is the best time of year to prepare for year end with her CPA or tax person? So the best time to prepare is before year end. The best time to prepare is right now. I would say that, it depends on the size of the business. If you're a little business and you're able to keep up with all your bookkeeping on a regular basis, monthly or whatever it might be, then do it monthly. If you want to go through and review everything monthly or quarterly or every 6 months, whatever works for you, a larger business really should be on top of it all the time. And they should review at least quarterly. They should review, or their accountant should review. Tax person or accountant, whoever it is you deal with, should, go through, look, and make sure things are being properly categorized. If there's any questions on anything, bring it up and say, what exactly is this? Where did you use it? How did you use it? That kind of thing. You don't want to wait until the end of the year. You're in the middle of the holiday season, and then you get past January 1st, and it's New Year, things are crazy busy and all that good stuff, and then you're freaking out wanting to get questions answered. You can't remember what you did last January. You don't remember what this check was for, what you bought, or whatever. So it's really just better to stay on top of it all the time. Now, if you're a small business that you do your bookkeeping regularly, maybe in the third or fourth quarter is soon enough. You can, wait until September, October, do a review, ask questions of your CPA, or have the CPA or tax person look through your stuff, and then you just have those last couple of months to go over once the year ends. So that's my theory on that. I guess that is pretty much it for the moment. I'm going to look and see if anyone posted any questions on Facebook here. And you get to watch me while I look. Well, I thought it would come up on Facebook for me, but it's not. So there you go. Anyway, I am new at this, like I said, so I guess maybe the questions will show up afterwards. I will... Oh, I see. Now I see. I see people posting questions at the bottom. All right. Okay, so not really questions, just comments, but hopefully you can all still see me. Somebody's just said broadcast interrupted. Hopefully not. I hope you can still see me. But anyway, so that is it for questions and answers today. Like I said, feel free to post any questions you have about what I talked about today, or post your questions for next time, and I will be happy to reply back privately or answer the question next week. I'm not sure what day I'm going to do this next week, but I will post that and set it up on Facebook for sure. And I appreciate everybody showing up, and if there's anything I can help you with, please let me know. Thanks. Bye.